Hey, what's up? What's going on, everybody? Back with another. Wait, can't hear myself. Can't hear myself. I can hear myself. That's a lot better. All right. So, back for our weekly bias. This is actually I need to get this off, but this is my weekend crypto paper trade on 1 minute from a 15 from a 4. So this is my fractal snowflake breakdown all the way on Bitcoin. So far so good. We'll see um, how that works out. But that's not why we're here. We're here to look back at this previous week and then maybe what we could anticipate for the week to come. That's also 1 minute. So let's go. Let's go back out to the week. Let's look at the weekly. Um, so some of the annotations will make sense. Excuse me. Some will not. So, just basically to recap from last week, where this will make some level of sense, and yes, there's some additional things on the chart I'm not really going to go into. I um, may it just depends. Create basically a playlist as to what the other areas of interest are on here, but like I said, I'll think about that. It's not really what is brought us here today. So again, just recalling last week, what we ended up looking at. This was basically last week's candle. This is the week that has just passed. This is just our this last previous week. So we were basically looking at this being the previous week. This was the low that was put in. So marked out on a 4 hour excuse me, the 4 hour time frame. This was our low. This was ultimately our high. I am a uh, basically I'll just call myself a power of three connoisseur. So basically from the weekly, what we were looking for is essentially the violation or the sweep of liquidity from either the sell side liquidity 4 hour low or the 4 hour buy side liquidity high, and then ultimately looking for a mechanism, break a structure, change in character, whatever you want to call it, to allow the ultimate run from buy side or sell side to the opposing side. Okay, that was the play that was set up. What we ended up with this past week was that criteria, in a rather dramatic sort of fashion. What we ended up looking at, and I'm just going to stay here on a weekly for a moment. We ended up with the open of the week essentially right on the 4 hour sell side liquidity low. But we still have not genuinely seen like a change. What we do show and what we do see, again, just staying on the weekly before we even drop down to the 4 hour or anything else, is if your eye can come back here. I have to leave that because there's a specific reason why that is what that is. You can take all four of these. These are relative equal at the point in time where this was relative. This was a high, but these are relatively equal. So you could take all four of these down close candles, or you can take three. It doesn't matter. All right. So what you can do is you can draw yourself out an order block, or you could just take this one. It's up to you. I don't know what you would do. Me personally, I'm taking the last down, and I'm just gonna draw, basically pull this all the way across. Okay. And I'm going to double click this. We're going to do our mid-level line. We're going to make the mid-level line. What can we make it? Color I don't have up here. Let's just make it green just for simplicity's sake. And then I'm going to make it like hella thick. Okay. So this is basically reflective of a bullish order block. Why is this a bullish order block? You've got four down close candles. You've got a bullish rally. This candle here takes out this entire range. That wick by itself. If you need proof of that, you have expansion in this candle, which leaves you a fair value gap in here. Let me zoom in a little bit so there's no confusion. I just want to lock that because I don't want to move anything. So again, these four down close candles and this bullish swing, this candle that I have my cursor on takes out this entire range. It takes out this buy side liquidity. It is considered, even on a weekly, an expansive move. Why? The top of this candle, the bottom of this one, leaves this fair value gap. The next candle, that following week after this expansion, it expands up. It kind of gives you the indication, okay, it's possible it's going to continue long, but what are we looking for? What's the proof of that? The proof of that is, does this stay open? Does it get tapped into to run? Well, that following week, what do you get? The wick does the damage. The body tells the story. This was the open of that week. This was the manipulation of that week. This was the distribution of that week. This was the close. So this by itself, just in here, this would have been a fair value gap. And theoretically, and this will pull us into this week and how this specific low, you see I have annotated here. I did that earlier this week, because while you could say, okay, well, isn't this wick is done the damage, it's beyond fair value in here. But what it does show you is it's still in fair value. You need this candle, and this candle. So you need these three candles to actually even make the fair value gap. So this is the candle's low. So that means this is still in fair value. What this ultimately becomes, as it related to this past week, was this is a low that could be targeted, which we see was taken out. And this was wicked through the previous week, which lets you know, okay, one of a couple of things. Price could continue lower to seek whatever additional inefficiency, or it could be looking to mitigate and then return back to another area of fair value, which will bring us to this week and analysis for this week as well. But this was a move that set this low to be targeted in the future, which is what it was. It was targeted this week, and then the price to move away. This is the subcontext. This is the primary context of this move. The primary context is this bullish order block that's sitting here. So how does that relate to what's going on right now? Well, this past week, this bullish order block was finally traded back into. And here again, just again for clarity and context, this is the consummate encroachment or mean threshold for this bullish order block. The wick does the damage, the body tells the story. So we opened, basically this candle this week opened bearish. So price initially opened bearish, but there was a very small manipulation which ultimately ended up being the majority of the week, to be honest. This was your manipulation all the way back into this bullish order block. But I want you to take notice of something. It violated the bullish order block. See that? It violated it because it basically came through. Now, it depends on what you determine your bias, what your trade plans and whatnot tell you. But for me, that's some type of significance, but it also means that tomorrow when the market opens, you may be inclined to sit on your hands and wait. Why do I say that? Okay. So now that we've established, we see this, I can get rid of this. So I can click on it. All right, cool. So now that goes away. So how does that translate into this week? Because I don't have to take you through all of that. You understand. We rallied, we moved away, came back in. Wick closure, right? So what does that mean for this week? Well, a couple things. It means that now we have fair value that sits just above this area. So you've got this new weekly fair value sitting here. That's going to be valid to some degree for this upcoming week. Because what it's going to show you this week is what's its relevance in terms of what price would like to do, right? Because you've had a significant rejection to continue lower. But here's something else that you have. And I want you to think about this. I'm going to take you back here to this candle again and this low. So remember I told you this is basically a low that's been established within fair value. It doesn't matter that it's not, the low is not within the fair value gap. It is still, or excuse me, it's not within the confines of what you would draw out like your fair value zone. So some people think, I'm sorry, this is going to turn into John Madden chart here for a second. But some people think that I just got to leave it here for right now. A lot of people think whenever you get a wick for it to be valid in terms of a run, that it has to be in this area, right? It does not. It just has to be within the range of the fair value. Now, if it's in here, perfect. It's more of a target. You can see it clearer, right? The fact that it's come down tells you it's paired orders. You've got this wick high, right? And you had this wick low, created the fair value. This wick coming all the way down and through lets me know, okay, you've paired orders here, right? So to make that a little bit more simplistic, I'll just do this. Just turn it around. Now I can actually just pull this over and say, okay, there's your order pairing right here. This is your fair value. You paired orders, you moved away, you continued longer. So whatever composite wanted to get out of shorts here or collect shorts to buy back up, that happened in here. You paired the orders here. Price rallied away. Okay? Now, the underside of this candle is still established. That's still a part of this fair value. So this low is still a future target, which it becomes. But what is this low also? In terms of the overall structural, the price structure delivery, what is this low going to be considered? And I'm not going to take you through a long, drawn out anything. And this may help understand this upcoming week. So there are a lot of educators, a lot of people will direct you to looking at certain things. If you remember this key, whenever you're looking at what's the probability or what's more probabilistic for something to happen, this is a good guide to help you with that. Okay? So this low, especially when it's contained within fair value, when it becomes targeted, this is going to be considered when it's run like it is a wick through here, but ultimately really here this past week. This is taken as external range liquidity. That's what this becomes once we move back beyond it. It's swept out. You've got basically, you have a sweep here, and while you have a body closure inside. So this is why it's key to look at it from this perspective. Okay? Take it for what you will, take it for a grain of salt, but it will give you an idea. And here's the idea for this upcoming week. I would be looking for something to happen within this area of fair value that was just created. Why? Because external range liquidity was swept the previous week, 2 weeks ago, right? Because we won't consider this past week. So we'll say 2 weeks ago, external range liquidity was taken, it was swept, right? So you don't have to believe me. We can all agree. Why can we all agree? Let me lock this down one more time. I don't want anything to move. Because we had a closure back inside. We had this closure back inside this range, but it swept it here. Okay? Then this past week opened, and the open is going to be here. Excuse me. So we had an open, a low, a high that created this fair value, and a close. So what do we now have? We have external range liquidity swept. Okay? We have swept, closed inside the range. So what are we doing? We're probably seeking internal range liquidity at this point. We've taken external. It doesn't mean that we can't continue to take external. We could sweep the external. We could seek any additional fair value or at price inefficiency before moving back inside. Well, we had some of that. This long wick down. What did it do? It took, again, external range liquidity. It took it here. It swept it here. And then it came all the way back up. And it closed inside. So external range, external range. For a second, I thought we were getting bombed, but if you heard that, that was some pretty dramatic thunder. So I will speed this up just in case, we get some extremely bad weather. That was almost on cue, kind of demonstrative. External range, external range. Blah, 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 blah. All right, whatever. So external range in two parts. So this week, I'm simply looking for internal range liquidity to be accumulated. Now, that immediately starts here in this fair value gap that was created. But let's not lose sight of the context from the previous week. The previous week, we were already looking at a 4-range high and a 4-range low. Well, we took the 4-range low. We created this weekly fair value gap. We have another 4-hour fair value gap up here, and then we still have the 4-hour buy side liquidity. So a couple of things to be mindful of when price opens. So price closed here inside, right? Let's drop down. I'm going to leave that on for right now, and that's locked. Okay, so let's drop down to the 4-hour. Okay. So 4-hour time frame. This is that area of fair value from the week. Okay. And now what we also have here is essentially the same, it's going to be the same idea. Okay. Same exact idea. So price closed here on Friday. Let me zoom in. I don't have to zoom back out, but it's fine. It's all good. Price is closed here on Friday. So we're still essentially looking for the same idea, same concept. It doesn't change. Does not change. So here, this is going to be 4-hour current buy side liquidity, because that's the high. That's the most recent high. So essentially, whenever price opens tomorrow for NQ, this should be the high unless it gaps up, and then the criteria changes. But at the moment right now, this is the most recent high And this, albeit messy, because there's a lot, look at where that sits. And I'm going to lock this back. And hopefully you can see, and this is not too confusing, but I'm going to expand this out so you can have an idea. All right, now I got to lock that back. So again, I'm zooming in so you could see these points. Can you see this over here? So this is the previous week for our sell side low. This is now last week's, this past week, as of yesterday, for our current sell side liquidity. That's what that is. We're not too far from that. So that's why I said you may want to just sit on your hands a little bit when price opens tomorrow. Because we could see a couple of different things. From looking at the weekly and then looking here at this 4 hour, what I would probably want to see in order to understand what the probability of price moving long for next week, moving back into an internal range liquidity seeking opportunity. This wick just kind of eyeballing here, this low, is not at the consummate encroachment of this fair value gap. I'm not going to draw this out because there's enough going on in here. Okay. But the top of this wick, the bottom, everything in here obviously is fair value. Well, this low, we just finished talking about this, looking at the weekly, right? This low sitting in a fair value gap, which would indicate it's a target. It could very well be a very short-term target from open maybe to Monday or Tuesday, okay? Because not 100%. Don't believe what I'm about to tell you. I would just simply say just go look at whatever instrument, whatever financial asset that you're familiar or you enjoy trading or looking at or whatever you want to call it. Go back and back test and look and find this, because I'm going to tell you now, more times than not, whenever you find a low or a high sitting in a fair value gap range, that is really going to be, I would call it, and this is just me, I would call it kind of like a low hanging fruit kind of target. Because your expectation should be, when you see that, that's going to be, once you get a certain negotiation or mitigation of price before getting to that area, the mitigation, the liquidity creation prior to that low or high being taken is more than likely being done to take out that lower high in that fair value gap. So this is just sitting in a prime place, in addition to the fact that also on this 4 hour, you got a closure inside. Okay? So price basically pushed up, created this, a part of this weekly fair value. What did it also do? Within the recent structure, I know you can say, well, we can go all the way back here. It didn't do it here. Okay, so in recent structure, and by recent structure, I'm just saying, let's just look back based on 4 hour candles. You had external. So this was external range liquidity, right? And I'm not, somebody could say, well, you're randomly picking and choosing. You can call it what you want, but it's going to show you. Like I said, you're going to see, it'll show you if you just go back test and look. So relative equal highs, okay? These two candles, this bullish, this bearish candle, relative equal highs. We follow that across. That's a failure to displace. This displace above, that's liquidity swept. That's liquidity taken. So now this is a high. You've got buy side liquidity that sits up here. Okay, closure. This candle opens. It manipulates. It takes buy side, right? It closes where? Inside this candle. This candle opens. It mitigates. It does not take this high. It closes, sweeps out this liquidity, but guess what? That's not really a low. That's not a defined low. But it gathers some liquidity, okay? Closes back inside. This candle opens, it mitigates. What's it do? It runs this buy side, and it ultimately takes out this high. Now, this is the most recent high. Closes. This candle opens, it doesn't mitigate anything, doesn't do anything. But what does it do? It displaces, it takes out sell side here. And you remember this candle? Remember this candle that took out this old equal high buy side liquidity over here? There was sell side resting here, right? But this is also the third leg, the third candle in this fair value gap. 1, 2, and then you've got this candle down here, which is the third. So this creates this fair value gap. Well, this candle, after another buy side run, so you got buy side liquidity, you have this high. This candle comes all the way back in, takes that sell side, comes back in, sweeps this sell side, and comes down, which is now our current week 4-hour candle sell side liquidity level, because it also took this out. But in taking this out, it did what? It briefly tapped into this fair value gap. So now you're looking at a low. Why is this a low? Because when it pushed back up, it closed here, it opened, you had some mitigation, and then this candle did the complete opposite. It ran up, it now took this buy side liquidity, it made this high. In fractal term, on the weekly, it also created a fair value gap on a weekly. This was the low. This is the underside of that weekly fair value gap. This is now our 4-hour current buy side liquidity level. The last candle that opened on Friday opened, what did it do? Mitigated, and it closed back inside this candle. Why is that important? Why would that be important? You can ask yourself, why would that be important? Well, while you're asking yourself, I'm going to answer it for you. I talked about this on a weekly. When we were looking at the weekly, I'll tell you here on the 4-hour. So this is what I would be looking for potentially tomorrow. And again, I'm not a market Nostradamus, but what would be probabilistic for me? What would I see? What would I be looking for? Me personally, I would be looking for maybe an opening price that opens somewhere either just above where this candle closed, maybe a very small run back above. Hell, it could even take out this very intermediary or very short term buy side liquidity resting above this 4-hour candle here. So right here, it could even open, take this out, but after that, do I expect it to run this? Not necessarily. Why? Because this was my external range liquidity, and from a fractal perspective, this is my external range liquidity that was taken here. This candle took external range liquidity. This candle demonstrated, hey, listen, we don't really want to run this. Doesn't mean that it won't. Doesn't mean from a higher time frame or a longer term price delivery perspective that this can't be run. Doesn't mean that. It means fractally, once I get the closure back inside this external range liquidity sweep, it might be more probabilistic to now seek internal range liquidity and inefficiencies. Okay? So for me, at maybe market open, I'm looking for price to move back inside. What would that look like? What could that look like? It could look something like I just indicated. Price could open, it could sweep out this buy side, this initial buy side liquidity. It could come up here. It could push back down, give you fair value somewhere in here. It could push back up, and at some point run this for our current week low. We've already run the previous week's 4 hour liquidity low, but it could double back through. Hell, it could even tap into the consummate encroachment between this actual fair value gap. So maybe somewhere in this area. And then piddle around. Maybe it does this tomorrow. Maybe it does it Monday. Piddle around a little bit. Maybe take that low out. Give you a market structure shift. Come back in, test. And I'm just running because I'm gonna run out of room over here. So, but essentially, at some point, run back and clear this buy side. That could be your week. Just looking at how it's possible. Like that's like there's so many different variations. Me personally, that's what I would be looking for. So I would sit on my hands initially and say, okay, what happens here? What happens once price opens tomorrow? Does it take this or does it immediately collapse? Now, if it does what it did last week, which this is kind of indicative a little bit of last week. If it does run initially short, because if you remember, if you go back and look at the weekly bias from last week, I did say I was looking for what? A very short term or very interterm bullish run before a continued short. That is what I said. And last Sunday, we got that, and it wasn't even an interterm. It was a super short term long before, and I don't have to explain what everybody now knows, but price kind of, somebody cut a hole in the bottom of the bucket and it dumped, right? So could we see the same thing this week? Absolutely we can. With all of the conditions that are shown and displayed. Because again, what do you have? You could look at this and say, okay, well, was there internal range liquidity taken? Yeah, you could call that internal range liquidity into a fair value gap. Okay, great. That's now a low. Outstanding. What then turns around and happens? We have external range liquidity taken in the very next candle. Okay, great. What do we have in the next candle? We have a failure to displace above, but we have a closure back inside. We have a mitigation of the previous external range liquidity that was swept, right? You have some mitigation here or manipulation, right? And then you have a failure to displace, but you have a closure back inside. So what is likely? What's likely is a manipulation here for the previous 4 hour candle. It's possible for this to get completely manipulated, which I'll just say here, and then I'm not gonna go too much further because it is what it is. Again, it's kind of like a snowflake, if you will. Okay, and I might lose some people when I say this, and that's unfortunate, but that's just what it is, and this is how you could think about this type of thing. This candle here, this last 4 hour candle by itself, you could look at as the buy side and sell side. Okay, and just stay with me if you can. Let me do this real quick. Just stay with me if you can. You could treat this as its own 4 hour buy side 4-hour sell side because of the closure back inside. Why am I saying that? Because not in every case the probability is on your side if you read the structure right, if you read the price delivery accurately enough. I won't say right, but if you're accurate in how you're processing the price delivery. If when price opens at some point, whatever it is, tomorrow, Monday, whatever, okay, whatever time it takes, when you get a manipulation back above this buy side, there's some educators that would say this is a false breakout, especially if it closes back inside and then it takes the liquidity on the opposing end. They would be correct, right? Or what is commonly referred to as the Judas swing, right? But it's ultimately a part of that whole AMD process: accumulation, manipulation, distribution. You're going to have something that accumulates in here. You're going to have the manipulation above. It's going to take out this buy side liquidity and give you some sort of a market structure shift, whatever it is in here, and it clears out here. Well, I'm going to take you one step further from all of those concepts. The idea and the probability would be on your side if you see this as, yes, the false breakout. But what I would also just challenge you to do in your own spare time, if you deem it worthy or you think it's significant, think about the concept of the quote unquote false breakout. I want you to think about the false breakout in this way. And again, take this with a grain of salt. If you see a manipulation in a given direction, albeit bullish or bearish, right? So in this specific case, if there's a manipulation back above this buy side liquidity that does not take out our external range liquidity that's been created, just this one, just this candle. If you see that done tomorrow, Monday, like I said, whenever, I want you to think about this manipulation as at some point, price wants to get back here. Right? I'm just putting that there so it's just some level of obvious, okay? I want you to consider the thought that if this buy side is taken, right? And we've already said that, yes, we're looking for shorts. We're looking for a closure back inside based on 4-hour. External range, I'm looking for internal. So that's the overall, right? However, I want you to also be thinking almost like three-dimensional in some respects. This is the move, yes. So in order for the internal to be taken, what do we need? We need a manipulation, for one thing, right? We need a reason to be able to consider the shorts. So something has to happen from the buy side perspective in order for us to be able to confirm shorts, to be able to confirm internal range liquidity being sought, to confirm inefficiencies, fair value gaps, whatever. You need that. However, consider the manipulation out in the future as price is going to want to come back here. So instead of looking at it as a false breakout, look at it from the perspective of, okay, we're manipulating here to garner or gather more momentum to pair off internal range liquidity, to pair off inefficiencies in price. But once we accomplish those pairing of orders, once we accomplish the inefficiency and taking that internal range liquidity, once that's been accomplished, we're going to want to come back here. Which is why this was the 4-hour buy side liquidity. Remember I said that, we don't, it's not indicative, like we're not looking to come here. But Somebody could say, "Hey, yeah, you're full of shit." That's fine. I'm okay with being full of shit. I really am, because this is one of the things I'm actually just showing and sharing you. This is one of the most simplistic things that was a. It wasn't so much an aha moment as much as it was me saying, "God damn, this has been staring me in the face the whole fucking time." Like I've been watching this happen, and I've been looking at it the entire time, because nobody talks. Well, some people talk in plain language, but they don't double back and repeat it in a fashion that makes it clear. Because you'll hear somebody say, "Oh, well, here's your manipulation here," and then you move back inside, and you've got a break in structure, and then you're looking for a fair value gap, and you take it short. They don't ever come back and say, "Hey, what about what do you do with that initial manipulation? What is that point in history? What does that look like? Do you come back to it? Does it matter, or is it just simply there as a means of saying, "Oh, hey, we manipulated here"? No, it's extreme. It can be extremely important. Here's the other thing that you could look at this as. Once that internal or external range liquidity, so we'll just keep it simple. Okay, I'm not going to give you another scenario. We'll keep it simple for next week. If once the shorts occur, if that is what the market decides to do, if we do see the shorts, if we do see internal range liquidity swept back out, if we see those pairing of orders, if we come back down into this area, right? My wow, my John Madden down here is horrible. Um, I'm just gonna leave that looking ugly as it is. But once these things happen, right, in whatever fashion, once that happens, and you, in this instance, you see something like, oh, okay, well, great, internal range liquidity taken. Okay, low, high, that's a lower low. Okay, so this is being set up. Oh, okay, this is a market structure shift. Oh wait, we came back into fair value. So when somebody looks back and says, okay, so what would I target from here? Well, if you got a 4 hour current sell side liquidity, and then it's already swept out a previous 4 week sell side liquidity, it's easy to target this buy side liquidity, right? That's that, like I already told you, like that is what my concept and my idea of a mechanical strategy looks like. But maybe you're looking at it from the perspective of, well, I'm not so sure about that. Where else can I target something a little bit more interterm, or something before I get here? Absolutely, you can. You can target two places. You can target basically this expansion and then the retracement back into fair value for the short to take the internal range liquidity. So you could target that pullback high if you get a pullback, especially because the thing about this one, you know what that could be, not entirely. I'm just gonna well, I would type that out. You're not gonna be able to see it because it's small as shit. What this point could be, I'm just adding extra shit. What this could be, um, there we go. That's perfect. So this point here, you know what that more than likely will become when you get something like this? You get your manipulation, you get a displacement below that's going to show you, hey, this is where we're likely to go. You might get a lot of, you might get another accumulation in here, but ultimately, you know what this more than likely is going to be centered in, or close to, or right inside? This point is going to usually be inside, wait for it, a fair value gap. So this high will be sitting inside maybe a fair value gap, or a portion of the development of a fair value gap. What did I tell you that more likely is going to become. It's going to become a target that you can target when you get a market structure shift at the end of external to external to internal range liquidity that's been run, fair value, price inefficiency filled, orders paired. You get a market structure shift that basically where prices said, okay, we've come down here and accomplished everything that we needed to clear internal range liquidity to at this point in time mitigate whatever positions, pair orders. Now we've got enough of what we need to go take on this 4 hour buy side liquidity. But in the process of getting there, we're going to have other liquidity points that we can reach into, tap into, and continue to mitigate, create liquidity before continuing to run here. This is going to be one of those areas. And guess what else is going to be one of those areas? That initial manipulation that starts the entire thing. So the false breakout is something that I honestly feel like at this stage in financial speculation, maybe we need to call that something else. I don't know. I don't, I'm not really spent a whole lot of time in terms of like other names or identifiers to tell you like what that is. I don't know. I'm going to be flat out. I have no idea. What I would just consider is saying, hey, listen, it is what it is. We can call it just the manipulation. I wouldn't call it a false breakout anymore. I would just simply say whatever the manipulation is that allows price to either continue short or long, whatever the dynamic, don't forget about what that point is and where that is, because that is going to be a future target to either take your profits and get out, just like this could ultimately be the same thing. So that's kind of that's what I'll be looking for this week. Don't know that we will get this at all, but that would be my probability. Don't mind my John Madden scribbling on here, but that's it. So I appreciate you guys for hanging out. If you got some value, or even if you have comments, always open to hear what it is that you have to say. I appreciate it. Everybody be safe, be profitable, and productive next week. And yeah, have a good day. Thanks.